Welcome for our present discussion for the subject accountancy for class 11. Third chapter I have started to discuss, and for third chapter first episode already I have discussed, and this is my second episode for the third chapter. Chapter is accounting principles. There in the first episode I have discussed that the accounting principles are divided in two parts. One is accounting concept or assumption, and another part is accounting conventions. The accounting concept or assumption that started to discuss, and three concepts I have discussed in the first episode. Just I am highlighting the name. Going concern concept I have discussed, consistency concept I have discussed, and accrual concept I have discussed. Right now, after that, I will start to discuss the remaining 3, 4, 5 concepts. Number 4 concept is coming, business entity concept. Now, business entity concept, that means entity means existence. A businessman should have a concept in the mind that my business is separate from myself. That means accountant also should treat the accounts, should maintain the accounting procedure, keeping in mind that the accounts will be prepared for the business, not for the businessman. Business is the abstract. Business can't do anything, but on behalf of the business, accountant will prepare the accounts, businessman will deal the business activities. There may be so many employees and workers also, managers also, who will manage the business, but accounts will be maintained on behalf of the business. So, business is having the separate entity, separate existent than its owners. This is the concept. And on the basis of this concept, business entity concept, whatever amount of finance as capital the businessman or owner or proprietor gives to start the business, introduces to start the business, that amount of capital is treated as the liability. Liability means, in the second chapter I have discussed, liability means financial burden of the business, that the business has taken the money from the owner. So it is the liability or financial burden of the business to give back this money to the owner. So it is a very fine concept that the business doesn't know anybody. This business thinks the business is having the separate legal existence or entity than its owner. Number 5 is coming, the money measurement concept. Money measurement concept. If there is a transaction that the machinery purchased, if this much transaction will be made, and I will tell or I will give the transaction only this, the machinery purchased, the accountant cannot make the record in the process of accounting, because the machinery purchased, okay, so how much value of the machine, sorry, how much value of the machine, the 50,000 or 60,000, that much amount to be mentioned. Then the question will be coming that the amount is already paid in cash or paid in by check, or paid partly in cash, partly by check, or that amount is not paid yet now, and entire amount of 50,000 is due, whatever. Yeah, partly paid, partly due. So amount to be needed to maintain the accounting process. So salary is paid. So how much salary? That amount to be mentioned. Otherwise, the accountant cannot maintain the process of accounting. So every transaction must have the monetary measurement concept. That is called money measurement concept. Next is coming accounting period concept. Very fruitful, very important all this concept. because previously also I have told that the accountant who will maintain the accounts procedure, he should know all these concepts. Otherwise, he cannot maintain the proper accounting procedure. Now is coming before us the accounting period concept. Suppose today, 29th June 2020, I thought that from today I will start a business. I am having 20,000 rupees and I would like to start the business. So I will introduce this money, I will purchase the goods, I will sell the goods, and this transaction will be recorded in the journal, ledger, but this will be going on year after year, year after year, year after year, but I cannot understand that I am making the profit or loss or whatever the position, financial position of my business, I cannot identify. So for that knowledge, for that identification, there should be the year-ending date of every financial year or the accounting year of any business or organization. That accounting year to be ended on a particular date. That ending date of the accounting year may be 31st December as the calendar year. That year ending date may be 31st March. That year ending date may be 30th June. But one thing keep in mind, that should be the 12 months consist. If my business year ending date is 30th June, so obviously the beginning date of my business is the accounting year ka beginning date hoga 1st July of 2019. So 30th June will be the 30th June 2020 will be the year ending date of my accounting period of this business. But if today I have started and I think that 30th June will be the year ending date, so tomorrow is the year ending date of my business. So only for 2 days I am making the whole year entry. This will end by tomorrow for 2 days. But after that 1st July starts, and from 1st July 2020 and the new year accounting year will start, and that will end the 30th June of 2021. That I am telling. So there must be the accounting year ending date. On that date, the trading account, PL account, profit and loss account, and the balance sheet, that is the financial statement, will be calculated, and from that we can understand that whatever profit or loss on the financial position of the business, of assets and liabilities, we can understand. But one thing keep in mind, if my business is the company type of business, there is no any option of accounting period ending date 31st December or 31st March or 30th June. There must be the one and only the date of year ending 31st March. That is fixed for the company type of business. Sorry. After that is coming historical cost concept. Historical cost concept, that is also called the cost concept. It is very good. Suppose my business is going on during 10 years. I am making my business, I am doing my business, and one machine I have purchased by rupees 1 lakh 5 years before. So whenever I have purchased, the cost price of the machine was 1 lakh, and I should assume that how long this machine can be continued as working condition. So I have assumed that the 10 years this machine will give me the good qualitative goods will be produced. So 1 lakh will be divided by 10 years and amount will be coming by calculation 10,000. So I have to assume that every year my machine value of rupees 10,000 is decreased year after year. So during 5 years, 10,000, 10,000, 10,000, 10,000, 10,000. So 50,000, the value of the machine is decreased. So right now at the end of the 5th year, the machine value should be shown in the process of accounting as 50,000, because value was 1 lakh machine value 50,000 already depreciated, that is called depreciation. Decrease in value of fixed assets is called depreciation. The value is decreased. Value decreased means the amount is not expensed. This 50,000, that is the 10,000 every year, I have not paid to anybody. This is assumed that the working capacity of rupees 10,000 is decreased every year. This is assumption. This is the concept, because the machine, how much working capacity will be at the right new time, after that, year after year, the same capacity of working capacity of that machine will not be sustained. So after 5 years, the value of the machine also, by the money measurement concept, the value of the machine also will be decreased, and after the end of the 5 years, the machine value will be shown in the process of the accounting as 50,000. What 50,000? 1 lakh minus 50,000. So 50,000 is coming. That 50,000 will be shown in the accounts process. But at the end of the 5th year, accounts process shows the 50,000 is the value of the machine. But that machine may be of 60,000 value in the market. If I will sell that machine in the market, maybe 60,000, maybe 40,000, but I cannot accept those value in the process of accounting maintenance, because whatever value or cost I have shown in the accounts process 5 years before, 1 lakh rupees, on the basis of that amount, the calculation is coming, and that is to be shown in the process of accounting. That's why this concept is called historical cost concept. History say आया historical. History means his story history. That means past situation को जो बतलाया जाता है वो history कहलाता है. So that's why this concept is also called the historical cost concept. पहले जो cost लगा था उसी cost के आधार पर calculation चल रहा है. This is called the cost concept or historical cost concept. So entire 7 points I have discussed, the 7 concept, previous 3, and right now 4 concept I have discussed, and the later on I am discussing the next concepts in the next episode number 3. This is my second episode for the chapter 3. Be prepared yourself. Thank you very much.